Yo, what's up, guys? It's Facture. This part two to the market structure video. If y'all haven't seen part one, I'll have it in the description below. Basically, in part one, we went over a theory of time and distance and how to find your swing points and correctly identify them and whatnot. This video is going to be going over complex pullbacks, major minor structure, and how to make sure that your lower time frame trend lines up with the higher time frame, so you can, and how to scale it down so you can find the best entries you can, right? So basically top-down analysis, multi-time frame analysis, whatnot. I just recorded this video and accidentally deleted it, and I'm super tired, so I feel like a retard. I don't even know if that's allowed to be said on YouTube. I don't know. I'm not trying to make money off of YouTube or whatever. Let's get into the video. So for structure, you have your lows and highs and whatnot, right? As I can see in the pictures here, it's just like diagrams of it. Well, the way I think of it is in major minor structure. So what that is basically your swing points are your major structure, and the price action in between the swing points is minor structure. And you can kind of scale it down, and I'll show an example of that, and then we'll hit the charts and I'll show it also on that. But essentially, the biggest part of it though is that the retracements is the key minor structure here, right? Your expansions are just going to be kind of like liquidity that needs to be taken out, like liquidity build up, so price has a cause to go to continue lower. And so I'll show that here in a second. So you have your expansion here, and then these would be used as liquidity. Okay, well, if this is your minor structure right here, right, the price in between the swing points, which is major structure, if your minor structure, if we were to zoom in here and say that this is the thing that I have highlighted right here, the swing points for this structure is now the major structure, and the price in between it is minor. Right, so you can see how you can keep scaling down by doing that, and keep getting entries. So I'm going to show a few examples here, going over that, and I will try and make this video quick, which it should be. Okay, so for today's trade, right, your structure points are boom, oops, boom, boom. This whole thing right here could be a push-up, but theoretically speaking, as of now, you could say that these are the points, right? So let's just go with that, because you can still you would have still caught 80 pip trade. All right, so looking at this now, we have our expansion, correct? Here's our demand level. The reason you don't want to look at price in terms of this as a break of structure is because if you get caught in a scenario where you think this is a minor low, now you have a break of structure. Well, what if you're shorting here now trying to catch the trade? All right, so all right, let's just go into it. So here's the pullback right here. Here's your structure points for it. Break of structure. Price comes and hits this order block, pushes up. Right, pushes up. So we just took a minute 15 piece of structure and took it down to basically the lowest you can go, and I've done the math on this already. This right here, this entry on this order block is 138. If you were to enter off of this order block without trying to scale down, you only get a 1 to 5. So what do you want? 38% on your account or 5%, you know? So let's come out here. And another great example is, here's your expansion. This being liquidity up in here. and here's your major minor structure points. Break of structure, this would have been a short-term trade, short-term entry, I mean. Held it down, and now you're looking for your pullback, truthfully up in here as an order block. But the way momentum's kind of looking, I feel like it could push all the way through. But I also think it can respect this order block completely. But anyway, so yeah, here's another example here, and this is a great example of showing how to scale in. So you're gonna mark your structure points out here, and you're gonna say this is the expansion, right? It would look like, and then wherever this caps off at, wherever you want to say this caps off at, if you want to say it caps off up here. Okay, well, if you were to, here's your expansion right here, and here's your retracement. So on the retracement now, you want to look at your your minor structure points. So here's your minor structure points, right? And then this high gets taken out. So now the lower time frame matches up with trend, matches up and correlates with the higher time frame trend. And you hear it all the time that you want your lower time frame trend to correlate with your higher time frame trend. Well, so price comes back, hits this order block, right? And a way you can scale in here is, now let's say this is the trend, right? This is now major structure, and these are your swing points. You have a break of structures to the upside right here. Well, this is the retracement. So you then would zoom in and see that and you'd see that this in here is your minor structure. Trend breaks, and then price eventually comes back and hits this order block right here. So, and that's scaling in, and you could probably get a 1 to, if you held a 1 to 1,000, probably a higher. And what we did was we just took H4 hour forward price action down to, really you can go as low as you want here, because then if you were to say that these are the structure points, you'd be looking at this. Alright, well, here's your retracement. So you want to look at that minor structure again, right? Because this is what it would look like. This would be your minor structure in here. Right. And then you would have this as your demand level if you have a proper understanding of order blocks. And I'm sure you can get in on the 1 minute down here and catch a trade. But yeah, basically we just took hour forward price action and broke it down through the use of the concept of major and minor structure all the way to the lower time frame, right? And you say that as an imbalance. So it's pretty simple stuff. The keynotes you want to take from this is the concept of major and minor structure, but alongside of that is the minor structure you really want to watch out for is the retracement structure. That's the minor structure that you really want to take notice in. And the theories from the first video still apply of time and distance. and the factor of liquidity being in the way for pullbacks. I think that's going to be it for this video. If y'all have any questions, drop them down below in the comments or message me on Telegram at Vaxur on Telegram. The next video I'm going to be making is going to be going over supply and demand and how to properly identify which order blocks, which supply and demand levels are going to be the ones that are most likely to get hit and respected and have proper follow through and whatnot. And it's probably going to be a couple videos. I'm going to be going over factors that play in for follow throughs or order blocks that are just there for reactions to happen. Kind of like an if-then thing. For instance, this order block being here is like so price can come back down and hit this order block to then continue higher. You know what I'm saying? And then also like this order block here, right? It's slight. It's nothing major at all. There's no follow through. But this order block, there's a follow through since the high was taken out. And like the factors leading into it in terms of how price is going to behave approaching it, what you want to look for in volume, kind of like how Wyckoff can play into it. Because even if you were to look at it here, you could say that this is accumulation of some sort. It'd be a reaccumulation. You say selling climax, automatic reaction, second test A, second test B, sign of strength. Or you can say change of character right here, right? Selling climax, automatic reaction, second test A, second test B, change of character, sign of strength. Last one is support, and then phase E or whatever is your markup. So there's a lot of factors that can play into supply and demand, and a couple things that can help you as a confluence in terms of how price behaves and volume and Wyckoff and whatnot. So it's probably going to be a couple videos going over it. Yeah, so that's it for the video, guys. Those will be the next topic. That'll either come out like Monday, Wednesday, or Fridays sometime next week. Really whenever I have time. And yeah, if y'all have any questions, message me on Telegram at Vaxur, drop them in the comments. If you combine the market structures theory from the first video with this one, you know, taking into account of time and distance, liquidity, to find your swing points, and then scaling that in through major and minor structure, with minor structure mainly pertaining to pullbacks and whatnot, and expansion being more so on the liquidity side, then you can be profitable just off of that. I mean, you don't even need order blocks alone. You could just enter off of fibs. But yeah, that's gonna be it for the video. If you have any questions, let me know. Blah blah blah. Yeah, that's gonna be it. Whatever. Peace. Shit.